So let's get into the topic real quick, guys. The topic for me this week is a focus on why it is important for me to trade that opening 30 minutes of the morning from 9:30 till 10 a.m. And I probably am beginning to sound like I'm beating a dead horse, but I think it's extremely important to kind of discuss a few things. And one of them is like the actual reasoning behind why those 30 minutes are, for me, the most important time of the day, as well as some other things. So why the opening 30 minutes? Well, if you guys are part of TrueTrader, you already know this. If not, this may be a bit foreign sounding to you or whatever, but the way I trade is I'm looking for stocks that have liquidity and range and make emotional moves, whether it's a big spike or an opening flush into extremely important levels, whether it's on the daily chart or intraday or into like a moving average or some pivots. And I take the reversion of that trade. Now, the reason those trades appear so frequently and work so often in the opening 30 minutes is because it's called the price discovery phase of the market for the day. You have a lot of big funds that have what we call market on open orders, and market makers and ECNs, they have to match their order books as best they can. And so you'll have this unique dynamic at the open of the market that only occurs typically right at the open, and there's imbalances at the close as well, but I don't trade that. But what happens is you may have an imbalance of buy orders over sell orders or vice versa, right? And so if the whole market on open is for maybe 1 million shares to be bought of XYZ and only 5 million shares are being offered to be sold as a market on open order, then there's a discrepancy in the supply and demand. It's what we call an imbalance, and you get these big crazy moves. So not only right off the open do you get these imbalances, but you also have whatever overnight catalyst there may have been. You have this other dynamic at work, which is the auction of the market trying to establish what people think is fair value for that equity at that time. And it can take a bit of time before the market finds some equilibrium and finds where they are in agreement that fair value is here. So during the price discovery phase, we get really big moves, and there's does it work every time? No, but it works enough that we have a distinct edge to take those mean reversion trades that are caused by these imbalances in this price discovery phase. So if you track the data on this, if you literally look at these kinds of setups day in, day out, at the end of the day, you go back through all these setups, you really, really, really begin to notice that it's not even so much the opening 30 minutes. It's like the opening 10 to 15 minutes is where the money is at for this strategy. And that's what I trade. And I say I trade the first 30 minutes, but I know for certain that as soon as we get past the opening 15 minutes, my setups are really diminishing. And even if they're there, they're not going to be as A+ as they were in the first 5 to 10 minutes. Now, there are different nuances to these setups, and I discuss them all the time in the room with TrueTrader guys. So, if you don't understand these setups or understand what I'm talking about and how we trade these, check TrueTrader.net out. We have the 5-day trial for $30, guys. Literally a black and white system that is given to you. If you want to know how to trade it, it's not a secret, but you got to come check it out, and then you'll probably understand more about what I'm talking about. But once we get past that opening 30 minutes, the price action is not the same. And I know a lot of people will argue, well, screen time's so important. Yeah, well, if you want to trade the opening 30 minutes, guess what? You can't study the charts or the price action or stock behavior at noon or 1 p.m. because what you're studying is not representative or applicable to the opening 30 minutes. They're not the same. So screen time is important, but you need to do it focused and with purpose. And you have to understand that what you're studying needs to be what you plan on trading. And I'm not here to tell you guys you can't be a trend trader and wait for that 10 a.m., 10:30 time period when you finally start to see trends develop. If that's what you want to do, then by all means do that. But I began trading as a way to have personal freedom and to design a life that I want to live. And, I can make more money by sitting at the desk longer, but the opportunity cost isn't worth it, and it's not a guaranteed thing either. If I'm up, 2, 3, 4R in the first half hour, well, let's say I'm up 4R after 30 minutes of trading. Maybe I took 5, 6 trades, 4 worked, maybe 1 was a scratch and 1 didn't, whatever. Let's just say that's the scenario that unfolded in the first 30 minutes. And then I decide I'm going to sit there longer. Yes, I might end up, closing out the day at 6R. So I gained another 2R, but at what cost? Hours and hours and hours of sitting there, wasting what could have been my whole day, whether it is pursuing an outside passion, maybe doing charity work, maybe you just trade as a supplemental income and you need to have another job, or you find a job that you actually get fulfillment from and you want to go do that job. Well, you can. But not if you're sitting at your desk all day, right? Like, I personally like to go golf. I like to golf as much as I can. Now, there's another side to that coin. What if you don't make another 2R on top of your 4R? What if you give back 2R? You were up 4R, first 30 minutes, and then you sit there for another 4 or 5 hours, and maybe you give back 1R. So you were at 4R, you give up an R, you're at 3R for the day. And what happens? You get upset because now you've given back some. Now you're a bit on tilt. Now you're going to take a trade to try to make back that money you gave back, or somehow justify that you sat there longer. And oftentimes what happens is you turn what should have been a nice easy green day into a red day, and that's completely unacceptable. Does it happen? Yes, but you shouldn't be okay with it. You need to be like, you got to treat this as a business, guys. And you can't just be sloppy. And if you do this for a hobby, good luck, because you got to take this dead serious. And I'm telling you right now, being serious about it, part of that is identifying when to be trading and when to be not in the market. And for me personally, that first 30 minutes gives me the ability to make a handsome living and have the whole day to enjoy my life. And that to me is like that perfect balance, living in harmony, right? If I had to sit at my desk for 7-8 hours in hopes of possibly making a little more than what I currently make, you wouldn't be able to convince me to do it, guys. So that's all I wanted to talk about real quick, was why you guys hear me talk about this all the time. There is actual reasoning behind it. There's data behind it. Whether it's tracking the setup to see does that setup work outside of that time period, or just looking at your personal performance using whatever software you use, whether you track your trading on an Excel sheet or you use something like EdgeWonk or TraderView or TradeMetria or whatever. Those things will also tell you, like, hey, asshole, look, you always lose money like between 10:30 and 11:30. What is that telling you? It's slapping your hand off the keyboard and telling you stop trading at that time of day. But for whatever reason, I can put up a few guesses what it is like some people are addicted to gambling, or that thrill. They just need to have some skin in the game. And that's, if you come to the market for that, you can go find that, you can get that itch scratched for a lot cheaper outside of the market, guys. You're a thrill seeker, go jump out of an airplane. You need to gamble on something just because you like to gamble. You can go find ways to do that, whether it's at a casino or just playing online poker or something, but not in the markets, guys. Not in the markets. Treat it like a business. Personally, my business plan says I trade the opening 30 minutes. I know, I can make an elevator pitch and tell you guys in 15 seconds what it is I do. Can you do that?